Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in coming weeks. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market got slammed early last week as the reality of inflation brought fear to the hearts of investors. I'll skip the usual day-by-day events that I bring often on Market Week and get right to the meat of it, that's because there's really a lot to show you in this show. Stocks fell throughout the beginning of the week, and then on Thursday and Friday had a rebound as the Fed heads were out there playing down inflation. WHO, which is the World Health Organization, came out early in the week and talked about the India strain of COVID and said that variant brings global risk. And the stock market didn't like that, and it took its first leg down of the week on that news. The economic data points that came out later in the week brought aggressive selling. But the usual conditions seem to have changed. Since the Great Recession, 2007 peak in the stock market, 2008 and 2009, bonds really have acted in a way where they've been inverse to the stock market. They were always a safety bid. When the stock market fell hard, bids came in because it was anticipated that the Fed would lower rates. And we saw that sharp upside move in bonds or big declines in the bond market yields as the stock market had those declines. Now, bonds, they're acting differently. And bonds are leading the market as we see the inflation numbers causing some strife to the bond market. And as we see the news come out of these big inflation numbers, and I'll tell you what those are in a moment, the yields did pop, and the stock market investors did not like that at all. So when I started trading, and that was May 20th, 1974, when I became a member on the CBOE, we traded so differently. Really, I learned to trade looking at bonds all of the time as they traded very much like we saw them in the last week. We would watch every single tick in the bond market. And if the bonds ticked up, we were buying. And if the bonds ticked down, we were selling. The other thing we looked at was IBM stock. Those were our two leads that we looked at as we were trading and heavily focused on that. So we're back in that mode like we saw in the 70s, where the stock market doesn't like it if yields are ticking up. So this week we saw all that early selling and the stock market falling very hard in the first 3 days of the week. And the way that the markets were acting was pretty strange, because you have to say, where was the money going? They really weren't buying anything as they were selling out stocks. We had some pullbacks in some of the strong commodities. They weren't really buying gold. In fact, that was selling on the higher interest rates. They were not buying Bitcoin because Bitcoin had its own problems that we'll talk about in here. And the truth is that managers are so leveraged and their cash positions are so low, and investors are pretty much the same way, that any downside move and they have to raise cash pretty quickly. And that's what we're seeing, a huge focus really on interest rates, and that there seems to be no safety bid. Even the dollar, which often gets safety bid when the market moves down sharply or when the stock market does, did not see an upside move. So bonds fell as inflation news just poured out all week long. China inflation rate, their PPI was up 6.8% year over year. U.S. family single-family homes They gained 16.2% for the year. That's the biggest advance since the 80s. There, of course, is a shortage of inventory on homes, and lumber prices going up so significantly, like 4 times, that has really pushed up the price of homes. In the U.S. here, the core CPI up 0.9%. That was the fastest rate since 1981 at a 3% year-over-year rate. I wonder if the Fed is listening, 3% year-over-year rate on the core. Well, that's significantly more than their target 2% rate. But of course, they don't think it's real. The U.S. PPI came out at a gain of 6.2% annual rate, and that is a record. So we're getting these kind of record inflation numbers and super, super big pricing. And the Fed, well, the chorus maybe changed a little bit from last week. And previous week, they were kind of preparing us for policy change. And now we're starting to see the same crap that we hear from them coming out, using language as transitory, that this inflation rate is only going to be temporary. And are they telling us that, if that inflation is anything but embedded into the cost of everything now, are we going to be able to see prices fall? Is that what it means? Or are these big increases in prices something that, well, we're going to pay forever? Of course, it never does come down. They never want to see prices stable, as really they're mandated to see them. Stable, of course, means zero. It doesn't mean gaining at 2% rate. And they are certainly playing this down because they do not want to see the stock market fall. If the stock market turns down and falls sharply, well, they have no bullets. They can't stop it. And that will bring the next leg of, well, deflation, which is actually well embedded into the economy for long term. A little bit of a change here. For the second time in 5 years, only the second time in 5 years, stocks in Japan fell 2%. They did that on Wednesday. And the Bank of Japan did not buy ETFs. You hear that? Only for the second time in 5 years did they not step in and buy ETFs on a 2% or more decline in the Japanese stock market. Does that mean they're finally fed up or loaded to the gills with ETFs? They certainly have taken over that market, owning such a huge percentage of those stocks and ETFs. And that's really a sickening thing. Of course, there is nothing close to a free market when it comes to Japan. Of course, I have to mention Bitcoin again. We saw a drop of 10%, which weighed on the stock market early on Thursday, but then the stock market did manage a recovery, and Bitcoin has had really a bad week. Musk came out and he backed out of accepting Bitcoin for car purchases. Of course, who would have bought any other than somebody who made a lot of money in Bitcoin? Nobody is going to go to change their dollars into Bitcoin so that they could buy a Tesla. That would be ridiculous. And he talks about the fact that it's got a huge energy footprint. It takes a lot of energy for mining Bitcoin. And he all of a sudden remembered that he was in an alternative energy business. I wonder if he did sell anything out before he decided to come out with that news. And you never know. I guess at some point we will know if he has reduced his position in Bitcoin. Of course, he spent about $1.5 billion of Tesla shareholder money to do that. There is a special report coming on Bitcoin in just a few minutes. So for the stock market, our analysis has shown May and June was a period of topping, and we believe it's here. Last week, we showed on the Market Week show the breakdown in the NASDAQ on a short-term basis, telling you that we believe that was very important, and it was likely that we were going to see other indexes follow suit, and now they have. So we're seeing a pretty significantly negative pattern overall as we look at our version of technical analysis. And it tells us that the bounce that we're seeing late this week, Thursday and Friday, well, we think it's doomed and that it's not likely to follow through. These buy the dippers that came in on what this is the Fed playing down the inflation and some economic news that shows that Consumers are not very happy right now, and of course they're fed up with these higher prices. Those consumer numbers help the bond market rally, and we're seeing as the bond market is able to tick up, of course now the stocks could follow, because as I said earlier in the show, that trend really has changed. So this bounce has come, and we don't think it's going to hold up. For the week, the stock market, it has solid gains, solid declines, as the indexes move down between 1.5% and 3%. And NASDAQ is really the weakest. Dow is still the strongest. At the worst point during the week, we saw the S&P 500 down 4.5%. So it was a fairly large decline, but we've had this big rebound here the last 2 days, but still leaving the stock market on the downside. Bond market, well, that loses about 1.5 points on the 30-year. The 10-year picks up about 7 basis points, up to 1.64, and we think it's headed now back up to 1.75, with an outside chance of 1.95 in just the next month or two. So that would be a situation, if it got up to 1.95, that investors would actually hate. Gold market gains like $3 on the week, and this is much stronger than you would think it would be. As interest rates tick up, it did get hit, but then it was able to bounce back. And the same thing for the silver market. So gold gains $3, silver loses about 15 cents on the week. And both of those have held really pretty well under this environment. The dollar ticked up about 0.2%, and that really is weak based on the conditions we've seen here in the stock market. So dollar, of course, acting very weak these last several weeks. And that's all about the likely necessity for a government to print massive sums of money, just crazy amounts, to pay for what Biden's plans are going forward. And this debt situation is just building at rates that are incredible. Oil market about unchanged on the week. It was pretty volatile. The oil market moved up sharply on the news of that pipeline hack and the shortages of gasoline in the Southwest. And then it moved down sharply on news of the pipeline restart, which brought it to where it's basically unchanged on the week. We still like the oil market, and we think those energy markets are still in good shape. Coming up, we're going to see a stock sectors preview, some beautiful work done by Arvi, where he's going to look at the oil service stocks and also look at the airline stocks. And then I'm going to bring you a special report on the crypto casino. And then, of course, we'll be looking at the stock market at the end of the show. We'll look at the SPY for the 1 to 3 month view for the stock market. That is what I bring you on the opening. I want to remind you to go to the askSlim.com website, explore that, look around. There's so much there, and I think it will fit for any style of investor or trader. We have so much information that comes out daily. If you're on YouTube, please do subscribe to this channel and click that notification bell, and you will get notification of one of the many videos we put up every single week. Make sure that you like this video and give it a thumbs up. If you're a user on Twitter, follow me at askSlim.com. And for questions on our membership, we have lots of information we can share with you. You can write to Matt at askSlim.com. Don't forget that if you have not been a member here at askSlim, you really want to get a taste for what we're doing. Our level 1, this deal is unbelievable. The special, we're holding on to this for a while. It's got great response. You're going to get our Slimulator Momentum Tracker, which is really for investors or longer-term holders. Over 1,000 symbols with our built-in algorithms, with scanning and sorting. It's just fantastic information that you will then have a good handle on the momentum conditions and what our bias is on those individual stocks and groups. We have them broken down into about 20 different canned groups, so you'll really like that. You'll get our weekly reports on the stock indexes and the ETF, Spider ETFs. You're going to have access to our new workbench where you can organize and prioritize and save and track analysis. You're going to get our Market Week archive. You can go back and look at a lot of these shows of what we said and what we taught. and our askSlim live replays. We did a 74-minute one last week that is so filled with information, and you can go and look at that also. And our special member videos, all that for just $14.95 a month. And if you sign up for 3 months, you're going to get that for $10 a month. Just $30 for 3 months, and you're going to get a great taste of what we do here at askSlim.com. All right, so we have a preview here. Arvi does great videos on Thursday. Arvi is one of the premier cycle analysts in the world, and stands right along with me in doing all of our cycle analysis work. That's how we bring so much to you. And he does the stock sectors video on one Thursday, and the next Thursday he does international markets. And we bring you a little preview of that, where he shows you a couple of these stocks or symbols that have great analysis on them. And I'm going to show you this one right now, which I think is phenomenal. And make sure that you do sign up so you could see the rest. Here we come with great stuff.
So this is Schlumberger. For SLB, we have a dominant weekly cycle, which is then broken up into these minor half cycles. And we have also overlaid the crude oil cycle here in red. Now, Schlumberger has been in a overall very negative pattern for many, many years. You can see this overall downtrend that we have been in Schlumberger, with these lower cycle highs and lower cycle lows really throughout that whole time period. Then we got our first sign of change with this basing cycle. A basing cycle forms when you have a cycle low that's higher than the prior cycle low, and then we get a confirmation as we break through the prior cycle high in that next rising phase, which is what happened here in SLB. And right now we are in a very positive overall pattern here in Schlumberger, as we have likely just formed a key intermediate term bottom, and you can see this pretty little weekly flag there that turned up sharply. And the overall odds favor likely meaningfully higher prices in SLB. On the upside, we have an intermediate term 78.6 at 37.65 and an intermediate term 100 at 41.23. That's really what we're looking for on the upside here in Schlumberger. If we shift over to the daily chart, you can see our daily cycles here with just one single cycle in play, which means we see one clear money flow pattern in play. And we are forming a swamped cycle on this cycle, where we've used up this whole cycle basically rallying. It leaves a short window of time for a pullback prior to likely getting another impulse back on the upside. So we're just looking for one more dip here into this next short-term low timing, which is due 513 to 524, and then likely another impulse back up. You'll also note that our slim ribbon is firmly pointed up, so that just indicates the very positive short-term momentum that we see here. So this is UAL. What we see here in UAL is also this very bullish longer-term pattern here, with these higher cycle lows and higher cycle highs really throughout this whole time period here. But what's happening is that we have likely formed a key intermediate term top right there and are in this corrective period in UAL. You'll also note that our weekly momentum is now firmly pointed down here, so that would indicate that the odds favor rally is failing until that next key low forms. The next key low is due 6.7 to 8.9. If we go ahead and shift over to the daily chart, so these are the short-term cycles for UAL, and UAL is also on the verge of a daily cycle breakdown. The key daily cycle low is at 48.90, and we are getting close to that here, and right now trading around 51.77 as of the time of this video here. What I want to highlight are the beautiful signals that we got from our Slim Ribbon PO. The Slim Ribbon PO is only available for our level 4 members, and it really does provide fantastic momentum continuation signals. You can see the beautiful bullish signals that we saw right here in the Slim Ribbon PO and right here, and you can see the nice follow through that we got in each of those cases. And just now we had a bearish signal that triggered in UAL, and you can see the follow through that we've already had here on the downside. So we just have beautiful signals out of this Slim Ribbon PO, and if you have access to it, I would definitely suggest you put it onto your charts and check it out for yourself. What we're looking for is really for rallies to fail here in UAL until this next short-term low forms. The next short-term low is due 525 to 63. So overall, a very ominous pattern or a warning pattern here for the moment in UAL. If and when we do break below this key daily cycle low at 48.90, this short-term pattern will really turn decisively negative.
All right, that was some great work by Arvi. Thank you, Arvi, for that. Of course, you can learn cycle analysis at askSlim.com. Please go to our website and look at that tab, Cycle Analysis Workshop. It's under the workshops. There's 2 of them there. And there's some great information there and a video, and you'll see what's in that 20 video module workshop that has many, many more videos attached to it where we teach not only cycle analysis, but many things about technical analysis. It's an amazing value. And just a reminder, we have a special I'll tell you about for level 4 in a couple minutes. And level 4 members get a 20% discount on that. So for our level 4 members that are watching this, or people that want to come on or upgrade to level 4, you can get that discount and see this just fantastic workshop that we created, teaching cycle analysis. All right, so we've got some things to look at in here. We're going to move forward. This is a special report, the crypto casino, a Bitcoin warning and proof of life failure. For those of you that have followed my work or are members and have seen the Bitcoin chart I have been sharing, I believe that the resistances that we had spoken of are the point that the market fell from, and that sets up a lot of problems for Bitcoin and probably for the whole crypto complex. I want to take a look and start out by looking at the chart on Bitcoin. And what we're going to do, of course, is look at cycle analysis. On the left that we're looking at, let me just get my pointer up here so that you can see it, sorry about that. Boy, I'm just putting stuff all over the place here. There we go. Okay, so on the left here, we're looking at Bitcoin on 10 weeks and a 2-year daily right there. The chart that I'm going to blow up here has cycle brackets on the bottom for those of you that are new. And what we're looking at here are key lows, and we measure from key low to key low. And there's also minor cycles inside of what we consider the dominant cycle. A cycle is measured from low to low. Now, there was an important low that was made right over here, and that was made after what we have is an abandoned baby right there. So it gapped up on a Monday, it gapped down on a Monday, and left a single bar. It's essentially an island, and that's usually a sign of a significant turn. The second thing is our reversal scout, which you see right over here, is pointing to the downside. That has negative momentum on the intermediate time frame here on the weekly chart. So this phase where the market rises right in here is what I call the proof of life, because this is a minor rising phase. And with this kind of a situation of an abandoned baby and negative momentum, it has to prove it can overcome that, what looks like a major turning point in the market. So it came here and it made a low at 47,440. And then had the rally as it was supposed to in this minor rising phase. But then it turned down, proving the negative momentum, and broke that key level of 47,440. What that says is that the time frame that we're looking at here in this big yellow area, which is what we consider the period of risk that we've been talking about, goes all the way out here into the first or second week of July. That means there's a strong likelihood that all rallies in Bitcoin will fail and that the trend will go down. Now, our projections in here are to the major 50%, which is at around, 34,900, 3,500, 35,000, or coming down here to about 27,500. Wow, that's a big drop. We have all along, and this has been up there for weeks and weeks and weeks, talking about a spring-summer crypto crash with an expected drop in the first wave, which is right here, of 1/3 of its value to as much as 60% of its value. So of course, if it got down over here, that would be about 60% of its value down here at that area of about 27,000 down there, or a little bit higher. So the risks are extremely high when I look at it here on the weekly chart. Now I'm going to switch over to the daily chart, which we also do cycle analysis on, and this is just phenomenally packed with information. You can see in here what are really very pretty cycle rhythms. So you can see the key low right over here, and right over here, and right here, and right here. These rhythms are just gorgeous in here when you look at that. And you can see the uptrend. This is the slim ribbon. The slim ribbon combined with the slim ribbon PO is the best combination of momentum indicators you will ever see. And as you can see in here, in a little correction here, it turned neutral, that's blue, but it gave all of these bullish signals right in here, all of these saying that conditions were great and that the upward momentum was likely to keep it going up. You could see the channel that it was going up in, and we call this the directional component to the cycle analysis. It's what pushes these cycles up in bullish configurations. Now, I want you to note right over here where it turned lower. In other words, this low here was lower than this low here. That's the first time it had done that in quite a while. And then the next rally phase right over here failed in the sell zone. We created the sell zone because this was a negative cycle. And it failed here badly. And then it broke under that key support level at that 46,700 right there. And that said to you that this downtrend is now well in force. I'm going to go back here to the weekly, and I'm going to show you the side-by-side right there so you can see how that works. And that is, this whole area here is negative and likely to see a decline into July. And that makes negative cycle patterns right here and failures in the resistant sell zone, as you see there. Blowing up the daily again, I also want you to see that what happened was all of this positive momentum and all of these buy signals that you see right over there on the slim ribbon PO turned negative. You see it turned red right over here, and a sell signal came right on this day, and look what it did. This is a very negative condition, and the probability of the bounce that we're seeing today of around $3,000 and coming well off that low of 46,000, that's likely going to end with another sharp move to the downside. So everything that we're looking at in here says that it's negative, and let's add to that cycle patterns are what forms head and shoulders tops. Here's your left shoulder, here's your right shoulder, right here, that's your head, and the failure in the right shoulder, the completion of the pattern, it really needs to break under that neckline, but we think it's going to, and then the measurement for the head and shoulders top is down here around 25,000. So we talked on the weekly at about 27,000, on the daily chart about 25,000, and there's a good reason to believe that that's where it's headed. We believe that the proof of life for cryptocurrency has failed, and that we're likely to see sorry about that. We're likely to see this Bitcoin moving down in a very sharp way. That's the look at Bitcoin. And now, what are the reasons that I would think, and that have been negative on the whole crypto idea, the whole concept of cryptocurrency? And I believe that it has been nothing but a giant casino. And I'm going to give you the 10 reasons why Bitcoin is failing. Number one, the scarcity aspect is false. even though there's a $21 million cap on the number of Bitcoin out there, there are unlimited cryptos. Then we don't really know the number between the cryptocurrencies and altcoins. I've heard 4,000 on cryptocurrencies, and then you add on the altcoins, and I've seen numbers about 7,000. I saw one number at 11,000, adding in all of the really not well followed coins. There is unlimited amount of cryptocurrencies that can be created. Number two, it's very low adoption. There's a few institutions that have opened up funds for Bitcoin. Not very many whatsoever. Yes, there's some companies that allow retail transactions on them, but they're very slow. They're not like using a credit card. There is very little adoption going on for Bitcoin whatsoever. It's all hype based on the trading that's going on in it. It's not a store of value. There is no intrinsic value or physical property to it. It's not a commodity. It's not anything. It's nothing but air. There is no store of value there whatsoever. It's low liquidity and high volatility. You see these huge moves on very relatively low volume. There's no volume in there for institutions to trade these things. They're just incredibly low volume. The use for illicit transactions. Well, I think that's overplayed. Maybe there's some of that. Yellen calls it misuse, and they're well focused on that, and then maybe that's important. But what I read is that only 0.34% of all Bitcoin transactions are in the category of what they believe is illicit use. So I'm going to put lower weight on that one, but that's a focus from the people that want to regulate it, and I think that's what's important. It has a very large carbon footprint, and that is true. It's costly to produce, and this was Musk's excuse, so that he no longer has to take Bitcoin, which is just a crazy thing, for Tesla cars. So that's ended, and I think it gave Musk an out to realize that. He's a alternative energy company, alternative energy technology company, and that taking something with such a high carbon footprint makes no sense to him. Regulation is coming. The SEC wants to regulate it. And they're looking at Binance this week, investigation by the Department of Justice. So they're going to go after these exchanges, which are extremely weak, and that's one of the big problems for with these exchanges. They're not regulated, and I think that these regulatory firms, regulatory aspects of the government are going to be after them in a very big way. There are more and more country bans coming out. This is just a few of them: Turkey, India, Saudi, Morocco, Egypt, Algeria. There are many more, and there are a ton of them that do not allow banking transactions. Even though they're not banned in the country, they're banned for banking transactions. Bitcoin is not money. The reasons are, well, number 1, 2, and 3, and 4. There's really low adoptions. There's few institutional actions. It's not a store of value, no intrinsic value, very, very low liquidity. And while the fact that you can do it's peer-to-peer and there's no central bank that gets in the way of that, that's also a negative for it, because it really makes it just a weaker fiat currency is what it does. And of course, you don't pay your taxes in it. And the way that fiat currencies get value is because you have to pay your tax in that currency. So it's not money. It doesn't fit into anything that is money. All it is a way to gamble. Crypto is a gambling casino. That's all it is. Each cryptocurrency is a slot machine in the great crypto casino. And with Bitcoin failing, you really have to wonder about that. Here's your crypto casino and the gambling mentality, with every single one of these being just simply people putting money in it because you may get more money out. You may get that mega win that comes out of it that we've heard about in the news, whether it be in Dogecoin, which is a nothing coin whatsoever, a joke coin, or the middle one there is Ethereum, which is getting some traction because of NFTs, which are beginning to fail also. and of course the hope that you could get Bitcoin to 100,000 or a million, which is what we've seen in there. This is all because of, well, Fed printing. It's bringing this huge gambling mentality. We see it in NFTs. We see it in SPACs. All of those are starting to fail right now. Bitcoin, I believe, is starting to fail. I have shown you the technical aspects in there, and this is just one big, great crypto casino. Every one of these cryptocurrencies is just another slot machine, another way to gamble. And yes, don't confuse blockchain technology or any of those technologies that these are built on. They're very much, I would call them fantastic. There's going to be massive adoption. They're going to change the world in the way that we track things. But the cryptocurrencies, well, they're nothing but a way to gamble, and we're seeing that right now, and the Fed has created this, and this is going to end up in just a giant crash in this whole thing. I think that you're going to see 80% of these cryptocurrencies gone. The fact you could buy NFTs is just the amount of money that they're paying for that is crazy. There is so much in the way of the numbers of how many are available and not selling. I mean, it's just a total joke. Actually, I could make an NFT out of this, and it'll probably be worth more than 80 or 90% of all of those other ones out there. We here at askSlim.com are market pros, and this actually could be an NFT. I hope that this presentation enlightened you and that you see that the atmosphere that we're in right now is nothing but a big crypto casino, and it's going to end very badly. This is a reminder, this is final weekend for our Level 4 membership special, 35% discount. This is the biggest discount we've ever offered. This allows you to be a Level 4 member, which gives you so much. I can't even all list it all here. You get our charts, all of the work we do on the Thinkorswim platform. You can sign up for, open up a Thinkorswim account right on our website on the main page. We do our analysis on the 84 best traded symbols. You get support from me and Arvi and Matt. You're able to make custom chart requests, and you're going to get everything in level 1, 2, and 3. It's so much. It's unbelievable. Please go to the website if you're not a member and take a look. For our members, you can use this to upgrade. All you have to do is write to Matt for that link, or go to the front page and then look for that little green box up on the top, and you will see the sign up for that 3-month special. It's $303.75. That's $101.25 a month versus the normal $159 a month. It is just so much information. It's going to make a huge difference in your trading. If you have any questions about that, please do write to Matt at askSlim.com. All right, we're going to wrap this up. We're going to look at the stock market for the next 1 to 3 months. We had been looking for the stock market to falter in May, have a pullback, and then move up in June. Then a bad second half of the year. That kind of sums up what our bigger picture is. We believe that the action that we saw, that we shared with you last week, is setting up the top, that we saw breakdowns in the NASDAQ on a short-term basis, and then we also saw that happen for the S&P 500 and the Russell in the last week. So we're getting a rebound on Thursday and on Friday, but we don't think that is going to last. I'm going to switch over here from Bitcoin and go to SPY. If you did not see our Bitcoin special that we did earlier in the show, you should go back and watch that. So this is the cycle analysis for the SPY. And for those of you that are brand new, and we have so many people every week that are brand new, we do cycle analysis, which are the rhythms in the market, essentially the heartbeat. And we evaluate the cycles based on measuring from important low to important low that you see right here. These are cycle brackets. They help us as guides to this movement that we see in the market. Our expectation was based on the minor cycle peaking right over here and pulling back, that we'd have something like a 2.5 to 4% move on the downside. Actually, we had about a 4.5% move on the downside. However, the pattern in here on the weekly and on the daily charts are suggestive that that low has not been seen, and that the rebound we're getting in the stock market here at the end of the week will fail. Now, it's been a nice rebound, and the S&P 500 is up 56 points on the day. That's about 1.37% here so far on Friday. But we do not believe this is going to hold, and we believe that this level that we projected down over here, about 402 on the S&P 500, it will come down again and even lower, potentially down to about 396 in the next 2 to 3 weeks. So that's really what we're looking for, is this rally to fail. It got support right on that 13-week moving average, as you can see. And if you look at the momentum, which turned up here back last November, it remains positive, and it's remained positive the whole time. Now, momentum conditions in the shorter term have lost their upward positive force, and they are more neutral, or in the case of the NASDAQ, negative. But this right over here is going to prevent any kind of a real collapse right now. And that's why we have been looking for getting down into the support zone and then another move up. So for the next 3 months that we're looking for another drop in here of minor consequence, as you've seen this last week, then another rally, which gets you back up into this area, probably nearer to 423, which was the target. We've gotten there already. Potentially up here to 430. We're not exact. We'll have to see how deep this sell-off comes, assuming it does come, to get a little better feel for that. And we believe that this period over here in late June, early July is the period of failure. So it's down again. It's a rally that tests the high and a complex top being built in here. And then this yellow area, the period of risk for the market to fall. If you look at all of the other areas in here that were yellow, some of them brought you, somewhat modest declines, and some of them brought, downside panics. And we don't expect another COVID-type panic that we had back over there last March, but we do expect that the period here following this next rally into June will be the end of it, and probably the high for the whole year. That's a lot more than a 1 to 3 month view, but we think that this action that we've seen in here this week is the beginning of this topping formation, and that we're likely to see more downside versus anything significant more on the upside. That is SPY. Remember, if you want to learn cycle analysis, go to askSlim.com and go to workshops, and you can watch the video in there, which gives you an idea about our cycle analysis workshop. That is it for this show. I want to make sure that you do go to our website and explore it. If you're watching this on YouTube, or go to YouTube, you can subscribe to the channel, click the notification bell to see our videos, to get notified of them, and make sure you give this video a thumbs up. If you want to follow us on Twitter, we are at askSlim, and you can write to Matt for any information on our memberships. That's going to wrap up this show. I want you to be so careful, because it is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been